Mark Matthews of Bank Julius Baer and Company is now joining in to take some questions. Mark, good to have you with us here. Good morning. Thanks very much. So we're at this 20,000 mark on the Nifty, and we're looking ahead. Does oil at 90, 91-ish kind of hurt prospects from here on for this equity rally, or you think, we'll be able to handle it and move on? What's your sense?
I think you can handle it. The pain point for the Indian economy with the oil price used to be about $80 a barrel. But with the improvement in infrastructure, I think now it's well north of 100. So if it got to above 100, then I would worry. But where we're at now, I'm not worried. And I actually don't think the oil price is going to go up anymore. Our own view is that 12 months from now, it'll be back at $75 a barrel.
Okay. Mark, hi, good morning, and thanks for being with us. It is really, a momentous time for our markets, right? The Nifty has hit that psychological 20,000 mark. So thank you for partaking in the celebrations. But the main point is that the retail money has been flowing in thick and fast into the Indian markets. I mean, we've seen the kind of flows that have come in from the domestic institutional investors. Do you think that trend is something that can continue, or is it time to get a bit cautious now?
Technically, the Nifty looks like it could be a double top, which is a bearish formation. But my sense is the momentum is strong enough that it's going to break out and continue rising. And retail participation is what's driving it, you rightly point out. And retail investors do tend to be more momentum-minded. There's nothing wrong with that, in my opinion, unless you get to absolutely stratospheric levels. The momentum is a powerful force. So I think to a certain extent they're following that momentum, and it's self-perpetuating. And I think it can go higher. I think the fundamentals are still supportive for the market to go higher as well. It's not cheap, but I wouldn't call it wildly overvalued either.
Hi, Mark. Good morning. Mark, what about the Fed? It seems now that the street is very, very content, and maybe part of the street believes as well that maybe we'll not see another rate hike. Are you in that camp, or do you think come November, the odds are suggesting maybe 45%? Are you in that camp, or do you believe that no, we are done with regard to rate hikes?
45% is still below 50%. In other words, the odds are that it won't happen. That's the futures market talking. And the Fed does pay a lot of attention to the futures market. It doesn't like to surprise the market. So if it felt those odds were too low, it would be sending us signals about that, and it's not. In fact, the verbiage coming out of the Wall Street Journal on Sunday, the Fed often uses the Wall Street Journal as a mouthpiece, was that they are getting ready to basically go on hold permanently. They don't want to say that outright, but that's what they're sort of indirectly transmitting. So we're of the view the last rate hike was in July, and the first rate cut will be in May next year. And then we're looking for another one in September, and then two more in 2025. So I don't think that bond yields should go up any more than where they are now.
So in your pecking order, what is the, where does India feature? I know India has been one of your favorite markets through the course of 2023. But if you look at the performance, right, I mean, the Nasdaq is up 30%, the Nifty is up about 10% this year. Do you think there is a lot of catch-up, that incremental catch-up that India has to do compared to its global peers? And for the next 12 months, what does the pecking order look like?
I think India is still right at the top. And I just think the planets are aligned in India's favor now, and no pun intended, but the Chandrayaan-2 mission was great PR for India, as was the G20 Delhi summit. So it's really getting on the global front pages in a way that I can't remember happening before, in a positive way. I mean, it's good news. These are good stories. And, a $10 trillion vacuum has been created by the problems in China. What I mean by that is China's market cap is about $10 trillion, and people aren't going to be buying that market. I really don't foresee that for a long time to come. And so they are looking for alternatives. Most people will go to Japan first because it's a bigger market than India, about twice the size. and significantly more liquid. But India is also one that they are looking at. And when they look at the fundamentals, then I think they come to the realization that it's a very good market to invest in. And so I would foresee it continuing to attract foreign attention and foreign money.
Okay, all right, Mark, we'll leave it at that. Thanks a lot for joining us and giving us your quick thoughts. And of course, it is, as I said, celebrations here on Dalal Street in general and with the investor community. And you continue to like the Indian market, so that's a good thing.